Welcome back to our comprehensive study guide for the MLO exam, 2025 edition. This is part 3, where we dive into some of the more intricate topics you'll need to master, including high-priced mortgage loans, or HPMLs, and the Patriot Act. Because honestly, trying to understand the nuances of mortgage lending regulations sometimes feels like trying to teach a goldfish to play the tuba. It's a lot. But fear not, intrepid future MLOs. We're here to break down these complex concepts into manageable, dare I say, even slightly enjoyable chunks of information. We'll be covering everything from HPMLs, which are loans with interest rates significantly higher than the average prime offer rate, to the Patriot Act, because apparently fighting terrorism and giving out home loans are now intrinsically linked. The Patriot Act requires lenders to verify the identity of borrowers to prevent money laundering and terrorism financing. So, buckle up, grab your highlighters, and let's get ready to conquer this beast of an exam, one needlessly complicated regulation at a time. HPMLs, those delightful loans that come with more strings attached than a marionette show at a puppeteer convention. These loans are defined by having interest rates significantly higher than the average prime offer rate. They require stricter underwriting and escrow accounts for property taxes and insurance. So if you thought regular loans were complicated, HPMLs are like the advanced level of mortgage lending. Consummation sounds exciting, doesn't it? Sadly, in the mortgage world, it's about as thrilling as watching paint dry. It's the moment when all the paperwork is signed and the refinance loan is officially completed. Think of it as the grand finale of a very long, very detailed performance. Redlining is the discriminatory practice of denying loans to people based on their neighborhood. It's like saying, sorry, you can't sit with us, but with mortgages. Fair lending means treating everyone equally, regardless of where they live. So remember, folks, denying someone a loan based on where they live is about as cool as wearing socks with sandals. Don't do it. Yes, even our non-permanent residents deserve a shot at the American dream, which, let's face it, these days mostly involves just being able to afford rent. FHA loans are available to non-permanent resident aliens, provided they meet certain criteria. They must have a valid social security number, be eligible to work in the US, and have a history of residing in the country for a significant period. So if you're here on a work visa and dreaming of home ownership, the FHA might just be your ticket. Arm adjustments. It's math, but with more anxiety and the potential to ruin your monthly budget. Fun. Let's break it down. Start with the index rate, add the margin, and don't forget the caps. Simple, right? Denying credit can be a real downer, so at least have the decency to tell people why. The Equal Credit Opportunity Act, or ECOA, requires lenders to provide specific reasons for credit denial. And no, you can't use carrier pigeons for that. Bi-weekly mortgage payments split your monthly payment in half, paying every 2 weeks. It's like the financial equivalent of tricking yourself into exercising more. You barely notice the extra effort and bam, results. You end up making an extra payment each year, reducing your loan term and saving on interest. HPML loans. They sound like a fun, exotic animal, but trust me, you don't want to get bitten by one of these. The Truth in Lending Act, or TILA, and the Home Ownership and Equity Protection Act, or HOPA, set specific triggers for high-cost loans. These include high interest rates, excessive fees, and prepayment penalties. So always be on the lookout for these red flags to avoid a financial sting. Subordination agreements. Because sometimes, even in the world of mortgages, you need to know who's top dog. These agreements determine the order of priority for liens on a property, ensuring that the primary mortgage gets paid first. It's like deciding who gets the first slice of the pie. The SAFE Act mandates that all mortgage loan originators undergo a thorough criminal background check. So if your idea of a good time involves fraud and money laundering, maybe mortgage lending isn't your calling. Stick to something less regulated. The Patriot Act wants to know who's borrowing money, and honestly, after the last few years, who can blame it? This is where the Customer Identification Program, or CIP, comes in. Banks need to verify your identity to prevent money laundering and terrorism financing. So next time you're asked for your ID, remember, it's all part of keeping things secure. Escrow accounts for HPMLs are mandatory. They cover property taxes and insurance, because managing your own money is hard. So, let's just let the bank do it, and avoid any surprises. The closing disclosure, that magical document full of numbers and legalese that will make your eyes glaze over. TRID, or the TILA-RESPA Integrated Disclosure Rule, ensures transparency in the mortgage process. The closing disclosure breaks down all the costs, so you know exactly what you're paying for. It's like a financial roadmap, but with more fine print. The CFPB, or Consumer Financial Protection Bureau, is here to say no thank you to unfair, deceptive, or abusive acts and practices, also known as UDAP. Think of them as the watchdogs of the financial world, making sure everyone plays nice. Because let's face it, someone has to be the adult in the room. PMI cancellation is like that friend who never wants to leave your party even though everyone else has gone home. But don't worry, there are ways to show them the door. Once your loan balance reaches 80% of the home's original value, you can request PMI cancellation. And at 78%, it automatically kicks in. So keep an eye on those numbers and you can finally say goodbye to that lingering guest. Telemarketing rules exist for a reason, people. The Do Not Call registry is there to protect consumers from unwanted calls. So let's all try to be a little less annoying, shall we? Remember, compliance is key. VA loans, they're not just for veterans anymore, but it helps if you've served your country. Did you know VA loans are assumable? That means if you sell your home, the buyer can take over your loan. Pretty neat, right? Just make sure they meet the VA's requirements. That's it for part 3 of our MLO exam study guide. Stay tuned for more insights and tips in the next part, where we'll delve into advanced topics like compliance, ethical lending practices, and the intricacies of mortgage underwriting. But hey, look at it this way. At least you're not studying for the bar exam, or trying to solve world hunger, or teaching a goldfish to play the tuba. Remember, knowledge is power, and a little humor never hurts. See you next time.